Okay, so let's get right into it. When you first look at a financial chart, it's easy to just see a bunch of random red and green bars. But what if I told you that's not just data? It's actually a story. Yeah, every single one of those little candles tells a chapter in this epic battle between buyers, the bulls, and sellers, the bears. And today, we're going to learn how to read the bulls side of that story.
So that's the million-dollar question, right? Can these simple little shapes really give you a sneak peek into the future? Can they actually tell you when a market that's been falling off a cliff is about to turn around and shoot for the moon? Well, here's the most important thing to get straight right away. No, they can't predict the future. There's no crystal ball in trading, unfortunately. But, and this is a big but, what they can do is tell you an incredibly powerful story about what's going on in the heads of traders, the market psychology. They show you these subtle shifts in momentum and feeling, and learning to read that story, well, that's the real key.
So let's start with the most dramatic part of the story, the big turnaround. We're on the hunt for those make or break moments when a market that's in a total free fall suddenly slams on the brakes and starts showing real signs of life. These are what we call bullish reversal patterns. So a bullish reversal pattern is a very specific arrangement of candles that you'll only see during a downtrend. Think of it like a flare being shot up from the battlefield. The sellers have been in total command, just pushing the price down, down, down. But this pattern signals they're starting to get exhausted, and the buyers, they're just starting to wake up and fight back. And our first pattern is a perfect example of this. It's called the bullish engulfing. And this one is a serious show of force. You've got a downtrend, a little red candle, and then bam, this massive green candle appears and completely swallows the body of the one right before it. It's basically the chart's way of showing buyers kicking down the door and screaming, "We're in charge now." And here's what it looks like in the wild. You can see the price is just dropping, and then right at the bottom, there it is, that huge engulfing candle. It's a signal that buyers didn't just stop the fall, they completely erased all of the previous day's selling, and then some. It's a really clear, powerful statement of intent. Okay, next up we have the morning star. Now, if the bullish engulfing was a sudden, forceful takeover, the morning star is more like a three-act play. Act 1, the big, scary red candle, total despair. Act 2 is this tiny little candle in the middle, a moment of hesitation, where the market just kind of pauses. And Act 3 is the grand finale, a strong, hopeful green candle that signals a comeback. So when you look at it on a chart, you can really see how this pattern marks a more gradual, almost thoughtful shift in power. The sellers were clearly in control, then they got a little unsure, and that's when the buyers jumped in and seized the opportunity. It's often seen as a more confirmed reversal because you can see that transition of sentiment happening over 3 whole sessions. All right, so we've spotted a potential turnaround. The uptrend is now hopefully our friend. But how do we know if this new trend has the legs to keep going? That's where our next set of clues comes into play, the bullish continuation patterns. These help us figure out if it's time to ride the wave. A bullish continuation pattern is kind of like a quick pit stop on a long road trip. You're already in a solid uptrend. The market just takes a little breather, maybe consolidates a bit. This pattern suggests that the bulls are just catching their breath before they start pushing prices even higher. Our first example here is the upside to Suki gap. So what happens is you get 2 strong green candles, and the market is so excited that it gaps up. It opens the next day higher than it closed the day before. Then sellers try to ruin the party. They try to push the price back down with a red candle, but, and here's the key, they can't even close that gap. That failure is everything. So what this really shows us is the market's incredible resilience. The sellers gave it their best shot to knock the price down, but that underlying buying pressure was just way too strong. That little gap now acts like a new floor of support, and the fact that sellers couldn't close it is a huge sign that the uptrend is probably going to keep on rolling. Now this next one, the rising window, is all about that gap. It's super, super simple, but you should not underestimate how powerful it is. All it is an empty space on the chart between the highest point of one candle and the lowest point of the very next one. That empty space is the signal. Just think for a second what that means psychologically. The buying pressure was so intense, so completely overwhelming, that the price literally leaped over an entire range of values. No trading even happened in that zone. That empty space, that window, now acts like a powerful pillar holding up the rest of the uptrend. Okay, so we've seen reversals and we've seen continuations, but what happens when the story reaches a real cliffhanger? When the buyers and the sellers are locked in a dead heat and the market just pauses. This is when it feels like the market is holding its breath, and it's when we see patterns of indecision. An indecision pattern is, well, it's exactly what it sounds like. The candle opens and closes at almost the exact same price. Sure, during the day, the buyers pushed the price way up and the sellers pushed it way down, but by the time the bell rang, they ended up right back where they started. It's a perfect tie, a stalemate. And the classic symbol of this indecision is the doji. It usually looks like a cross or a plus sign. That really thin horizontal line tells you the open and close were pretty much identical. The long vertical lines, we call those wicks or shadows, show you there was a huge fight, but in the end, the result was a draw. A doji can often signal that a trend is running out of gas.
A really close cousin to the doji is the spinning top. It tells a very similar story of indecision. You still have those long upper and lower shadows showing a big fight. The only real difference is that it has a small but visible body. This just means the open and close were close, but not exactly the same. The battle was still a stalemate, just with a little bit of ground gained or lost.
So when you're trying to tell them apart, it all comes down to the body. Is it a super thin line? That's a doji, a perfect tie. Is it a small box? That's a spinning top. But honestly, the message they're sending is pretty much the same. The market is uncertain. The trend that was so strong before is weakening, and a change could be just around the corner. Wow, we have covered a ton of ground. Reversals, continuations, indecision. But look, just knowing the names of the patterns isn't enough. The real art is learning how to put all these clues together to read the market's full story. So let's wrap this up with a few absolutely key principles. You've got to remember these 4 rules. First, context is king. A bullish reversal pattern is totally meaningless if it shows up in an uptrend. Second, always wait for confirmation. The very next candle that forms after the pattern is often what tells you if the signal is for real. Third, there's strength in numbers. Seeing 2 or 3 bullish signals all pop up together, now that's a much more compelling story. And finally, and this is the most important one, always remember, these are indicators of probability, not guarantees of profit. They are not crystal balls. And that kind of leaves us with one final thought to chew on. We've spent all this time looking at charts and patterns and candles, but what we've really been looking at is a visual record of human hope, greed, and fear playing out on a massive scale. So it makes you wonder, doesn't it? At its very core, is the market driven more by cold, hard calculation or by raw, powerful human emotion? Something to think about.